The latest pullbacks in cryptos and the stock market, things are starting to look pretty bleak as everything's starting to take a turn for the worst. This is EOS, the 1 hour chart, and its pattern looks very similar to what we're seeing in other cryptos as well, other coins. We had what we were calling a three-wave rally in EOS, and then we had a very sharp pullback that could have still been considered a fourth wave pullback for a larger leading diagonal. However, we've kind of failed to launch since that. We would have expected an ABC rally to start us off with a relatively deep pullback, but because of the depth of this thing, we've almost invalidated this rally structure, and the pattern is similar in other coins as well. EOS probably has the most clean setup for some downside, simply because we were expecting possibly a second wave bounce. That's the red pattern here, and we've had a sufficient second wave bounce. So once again, just to reiterate, we were looking for a fifth wave higher. If we broke 317, that would give us a clean 1, 2, 3, 4, 5 for a leading diagonal. It wouldn't be a clean impulsive structure, but better than nothing. And then we would have expected probably a very deep second wave, and then we'd be off to the races. However, our alternate red pattern was that we actually have a first wave down, and that is the first wave down after an ABC up. So again, ABC, corrective pattern up, so it'll be a fake out bounce. This would be a 5-wave pattern down, which does seem like is the case in EOS, especially you got a 1, 2, possibly a 3, sideways fourth, and a fifth wave to finish it. So this does look very cleanly like an impulsive wave down. We're expecting a second wave bounce up as high as 61.8% retrace. However, oftentimes these bearish corrective bounces are up very deep, which is what we saw here. We actually got almost a 76.4% retrace, and then we've come right back down. So this is looking very eerily like the reddish bear setup. So this is our second wave peak here. And if I set the Fibonacci retracement tool, extension tool, as if this is the second wave, that means we are now in the midst of a third wave down. And if that is the case, we would expect to get somewhere probably south of 159, so $1.59, all the way as low as 120 on the third wave alone. The third wave is the strongest. So this is really what our parameters are. If we can quickly turn around and save this bullish pattern, we'd have to break 317. If that happens, the red pattern is immediately dead. It's invalidated immediately. That's what this caption here says. Otherwise, we would be looking to break this low that we hit on February 24th, which is at 186. I would expect that if we are following red, this would be very quick and swift. There wouldn't be much ambiguity. Since this is a third wave, I expect us to smash right through here like butter. Now, if it does bounce back up, there's a chance of that. It could get a lot trickier, but I expect this to be very clear over the next few days. The reason also is that, again, other coins are showing the same pattern, and then the equity space has the exact same situation going on. We've had a colossal three-wave bounce since February 24th. So again, there has been a lot of confluence, a lot of coincidence between the S&P 500, the Dow, the Russell, and all the crypto coins. So this is clearly a 1, 2, 3, three-wave rally structure. No way to count this as fifth wave. And we've pulled back so sharply that this looks like it has a little bit lower to go. So I did cover this in my update a day or two ago for the overall crypto space, but we are expecting a pretty good pullback to finish off this correction. It could go pretty deep in the stock market, and I expect to see the same action in the cryptos, especially after today's really sharp bounce. We had a 2+% bounce, possibly even higher in some of the cryptos. So that's what we're looking at short term. So if you are looking to de-risk a little bit, it would not be a bad time to start doing such. I, for one, will be taking off 1/3 to half my tranche, half my holdings in cryptos, depending on which crypto and the timing. So I may start that as soon as tonight. That is my personal strategy. Your strategy should depend on whatever your overall outlook is. If you're a long-term holding kind of investor, it may actually be better just to hold through this correction. If you are a little bit more wary, doesn't hurt to take off some. I wouldn't panic sell at this point, because you never know. Once these crashes complete, there's usually a sharp reversal that catches you by surprise. More on that in just a second. The other thought is that once we crash down, could be a great BTFD opportunity. So this is the big picture logarithmic chart, daily interval. And well, the picture's not much better when you look at it in the logarithmic view. We clearly have a three-wave rally up. Nothing about this can be considered impulsive. Doesn't look like a leading diagonal. There is still the potential that this whole rally was a first wave in a larger diagonal pattern. However, to get this to validate, we really need to see some upward action very quickly. There's not much time. Basically, the time is around. We've pushed about as low as we can without breaking the upside setup in the near term. So where are we targeting the short term? Well, EOS is a little scary because we do have the black hole below, which sits at 128. We cannot break that no matter what. That would immediately invalidate the entire upside structure that spans from the March 2020 everything crash all the way to present day. So we don't want that to happen. Ideally, we get to around the bottom of this box, about $1.71. I wouldn't expect us to go too much lower than that. That would be risky. There's a lot of confluence at that point as well. Excuse me, I think I'm talking a little too fast here. Now, again, there is history in EOS. Whenever you crash, you have your red candles down. You tend to have very short reversals, and I would not expect anything different here. So again, to those who are selling, don't overdo it. The bearish sentiment is strongest towards the bottom. So this is when you're going to feel the most urge to sell everything and get out. And you're going to feel very relieved when you sell all your coins, when the price drops in this purple box, when that is actually when you should be considering buying. So again, warning for those who are panicking, do not panic sell. Again, if you want to mitigate some of that stress, it's good to possibly sell a third to a half your tranche, a third to a half your positions, something like that. When you start buying again, you can do the same thing. You could buy half your position at the bottom. You could gradually buy up. When you are buying on the other side, let's say we have this finishing, I would expect a 5-wave impulse first up, and then you'd expect a 3-wave correction down for a second wave. That would give you a bit more confidence in buying a tranche and deploying it. And the final thing I'd like to cover is that there's some confluence between our projections for the low here, as well as on the big picture. However, 128 is our absolute major support. We can't break that. We're projecting lower than that here. But the thing is that our patterns count a little differently between linear and logarithmic. It would not surprise me if this actually ends up being more of a diagonal kind of finish. So we might have a third wave that goes down to about $1.84, and maybe our fifth wave doesn't go as low. So let me illustrate that as such. I'm going to get this thing illustrated before my hiccups render me mute. So this is a 1, 2, and a 3, possibly a ugly fourth wave bounce, and maybe our fifth wave takes us all the way to the breaking point, something like that. I would not be surprised to see a structure like this to finish it off, just because I can't imagine us actually breaking our $1.28 major support at the bottom. So that's the situation. I'm still 50-50. The green pattern does not invalidate until we break below 186. So until then, the bullish pattern remains my primary, but you guys have my parameters. What I'll be doing, I'll be posting plenty of updates. So don't forget to subscribe. And if you enjoyed my video, don't forget to give me a like. Till next time, thank you for watching and happy trading.